It's time to be cautious, and there is no time to waste. So let's crack open this chart and see what's going on in the stock market today. All right. Today's SPY was flat and went absolutely nowhere, and we are still closing just below that resistance right around 436. And tonight I'm going to do a little bit of prediction. I do think we are going to put in a lower high from this pullback, and I do think we are going a little bit lower in this market. And on SPY, that is going to be right around 427 or the breakout right around 430. And then from there, because we are in this bull trend, I think there's a very good chance we continue higher. Now, the reason I want to give this prediction is because I want you to be cautious. And if I show you this scenario and I highlight this scenario, you are going to take it a little more seriously than if I just tell you anything is possible and follow the price action, because a lot of you still have no idea how to do that. And that's completely fine. Everybody's on their different journey and everybody is still learning how to trade. But as a price action trader, you are instantly going to know if I am wrong if we start closing above these levels at 436 to 439. So those are the lines in the sand for this scenario to play out. If we start seeing price action breaking through those levels, I am simply wrong, and that's completely fine because it's very little risk to assume this is going to happen. And I'm not even telling you to short the market, I'm just telling you to expect further pullback. So whether or not you short the market or you simply just sit in cash waiting for lower prices, you are going to be using this critical resistance between 436 and 439, and only you can define how you want to trade and how you want to manage risk. So this is my preferred scenario. That doesn't mean I'm correct, and remember, the market couldn't care less what I think, but I'm going to give you my opinion anyway, because why the hell am I here if I don't give you my opinion? So we're looking at 436 to 439, and if we break that, we're obviously going back up to retest the highs just above 442. The reason I prefer this scenario is because I still think this is a bull trap bounce to a lower high, and I think this market needs to put more fear into people because people are just getting too complacent and too greedy, and people are really just starting to get complacent, and that's usually when the market is about to punch you right in the teeth. So whether you're bearish or bullish, I don't really care. I think we're going a little bit lower before we go any higher, so watch those critical levels. And the critical support will be that zone between 427 and 430. And obviously, if we break that support, then we're looking for a full-blown correction that could take us to lower prices. And my lowest price I think we're going to is down there at 414. Again, all of these scenarios are possible. And of course, there's the scenario where we don't even put the lower high and we just start blasting higher. I just don't prefer that scenario, and it's very little risk to assume a lower high right here because we're already butting up against resistance. So I am personally telling you to be cautious and expect a lower high. Whether or not you heed my warning is completely up to you. Jumping over to the NASDAQ 100 triple Qs, we were up 0.2% today, and as you can see, we also came near resistance, which is right around 367, and we did get some selling before the candle close, and this is actually a pretty bearish candle because we couldn't hold on to the gains. So if you think about a bullish scenario where we bounce off support, we should just go skyrocketing higher and blast off to higher highs. And as you can see from today's candle, we are getting a little bit of hesitation as we approach that resistance at 367. So I am officially calling this a lower high, and I think there's a good chance we're going down towards 355 to 347. Now again, you're instantly going to know that I am wrong, and that is completely fine to be wrong as long as you're taking very little risk on your idea. And the very little risk on this idea is at that critical resistance right around 367. You can give it a little more wiggle room up to about 368. But again, if we start closing above that level, I'm wrong, and we're likely not getting this scenario, so you know exactly where to manage your risk from. Remember, this is a game of odds, and this is a game of risk management, so as long as you're not taking on a crazy amount of risk, and you have a decent amount of reward when you're correct, you don't even need to win 50% of your trades to be profitable. So watch that critical resistance zone, we'll call it 367 to 368. If we start closing above it, I'm wrong, and we're likely going higher again towards 372 to 390. Again, this is my preferred scenario, but the market couldn't care less what I think, so just because I think this is going to happen obviously does not mean that it will. Critical support is that retest of the breakout at 355 and 347, and if we get something worse, we're looking for the gap fill around the middle of July, which is going to take us down towards 333 to 337. And again, that would take us a couple of weeks to get there, but that is going to be a very painful decline if you don't think it's possible and you're not at least preparing for it. Jumping over to the Dow Jones, we were down 0.18% today, and we are sitting right on top of this bunched up confluence of moving averages, which is the zone right around 338. So above or below 338 is going to tell you everything you need to know, but the critical support is still down here at 336. The lower high situation in the Dow could take us up to about 341 to 343. And then if we start to get that rejection, we're going to be looking for the break of critical support at 336 to tell us that we're going to lower prices. But again, the Dow Jones really hasn't gone much of anywhere this year, and this index is really just going sideways, so I'm not putting too much weight on where the Dow goes, so I wouldn't be surprised even if we're getting a big tech correction if the Dow Jones just kind of lazily chops around between this range of 336 to 343. On the Russell 2000 IWM ETF, we were up 0.49% today, and the Russell is bouncing off that critical support right into what I consider critical resistance, which was the breakdown below 185. So in the scenario where the small caps are going lower, we should see a rejection from 185 and then come back down towards this gap for that 176. And again, these are all of my preferred scenarios. That does not guarantee they're going to happen. You're instantly going to know I'm wrong if we break through 185, and then we'll be looking for a retest of the highs at 188. And then above 188, we're back on the bull to 195. So again, you have the critical levels, and all you need to do now is follow price action and don't just assume I'm going to be correct. If we start breaking these critical resistance zones, you need to assume I'm wrong and we're going to higher prices. On the ARKK ETF, we were up about 2% today, sitting right at critical resistance, right around 44.5, and if we break that, we're likely going up towards 46. A rejection from here could be a double top, but we'll need to break support at 43 and then down here just below 42. And then we'll likely go to lower prices, and yes, it is possible because we do have outstanding gaps to the downside. However, we have that bull trend, so you can stay bullish as long as we're above 42 to 41, and then if we break that, you're looking for a double top rejection to lower prices. On the VIX, we were down 2.11% today, and the VIX is still crushing, so we still have this very complacent, low fear environment, which is exactly what you are going to see in a bull market, so this doesn't mean we need to get bearish as long as the VIX is staying below 15. If we see the VIX spike out above 15, I think we're going straight to 18, and that is going to be a very panic sell-off. But again, we need to see it, and we can't just assume it's going to happen. On Bitcoin, we're currently down about 2%, and Bitcoin is chopping around exactly where we would expect, which is that resistance right around 30,500. And if we continue lower, we're looking for possible support at 29,000 and the breakout at 28,000. Just like any bull trend, it is completely normal and healthy to get higher low pullbacks into higher highs. So if Bitcoin pulls back into the breakout at 28,000, that is a buying opportunity and it is a bull trend. So we should be looking for higher prices after we bounce from that support zone. On Amazon stock, we were down 0.11% today, and I don't love the daily candle rejection outside the upper Bollinger Band because if this was bullish, we should have no trouble pushing to the price target at 133. So even though we are likely going towards 133 to 134, you need to pay attention to this candle and this bearish looking rejection. So what that means, if we break down below the breakout at 128, we're likely going straight back down towards the support trend line right around 123 or the critical support at 121. So manage your risk right there at the breakout at 128, and you could only stay bullish in my opinion while we are above that breakout level. On Microsoft stock, we are up 0.38% today, holding on to the support at the rising moving averages, which is 334. But if we break 334, I am looking for lower prices at 323. If we hold above 334 and break out, we could push higher again towards 350. On Nvidia stock, we were down 1.81% today, getting rejected below a negatively sloping 5 EMA, but sitting right on top of the rising 20 daily moving average at 406. On Nvidia, I consider critical support 398 to 406, and if we break that, we could see a waterfall wave of selling back down towards 374. So there is a lot of downside risk if we break down below support. If we hold support at 406 and bounce, we're going back to 427, and above 427, we start climbing towards 448. On Tesla stock, we're up 2.41%, and I think Tesla is going to bounce off this rising 20 daily moving average and get rejected between 262 to 268, and then come back down towards this support zone at the breakout right around 230 to 215. I have a very good feeling this is what's going to happen, but that doesn't guarantee I'm correct, so manage your risk right around that breakout at 268. And if we start breaking 268, we're likely going straight higher towards my next price target at 295. So again, I have opinions on where I think we're going, but that doesn't guarantee I'm going to be correct. So just because I'm saying this is going to happen, obviously does not guarantee it will. So manage your risk at that critical resistance at 268. On Apple stock, we were up 0.63% today, and Apple had a direct hit on my price target, which was right there at 190. And this is one of the reasons I think you need to be a little cautious, is because Apple is now reaching the price target, and this is a market moving name. So if Apple starts to pull back, even if it's only towards support right around 182, this is still going to put a lot of downward pressure on the indices. This is a market moving name, and this is a behemoth that moves the entire stock market. So look for a potential rejection around that price target at 190, and the critical support remains 185 and 182. On the financial sector, we were down 0.24% today, and financials are very simple. We are cautious and looking for lower prices until we start closing above the 200 daily moving average, which is still sitting up there at 33.6. Do not overcomplicate it. It is really going to be that simple. The industrials were flat on the day, going absolutely nowhere, but still in a bull trend, so you can still stay bullish as long as we're trading above 103. The healthcare sector was down 0.32% today, testing that breakout right around 130 to 131, and as long as we bounce here, all is still well, and we can still hit the price targets at 134 and 137, but if we start to break down and lose support, just get a little more risk off, and we are seeing an uptick in volume. On the energy sector, we are up about 1%, sitting right at resistance just below 80, and this is still a lower high with the potential of getting rejected at the 50 EMA right around 80.5, which could still be our lower high into our gap fill price target at 73. So jumping back over to the S&P 500, I gave you a lot of my opinions today on what I think is going to happen, but you still need to let the price action do all the talking, and there's a very good chance with the bull trend that I am completely wrong, and we blast right through those resistance zones I just gave, but it's going to be very simple to just be patient and wait for price action to prove it, and then you can manage your risk from those support zones and still take bullish trades. I would much rather you prepare for the worst and expect the best than to think we're going higher and be surprised by more downside. So there is elevated risk of a lower high rejection here, so be aware of it, and as long as you're aware of it, you should be able to properly manage your risk in the event that we see this scenario playing out. So obviously nothing is guaranteed, let the price action do all the talking, and always manage your risk around the critical levels that I give you. Don't forget I have my own trade alert service called Bang Trade Alerts that will send you all of your buy and sell alerts directly via email and text message, and only trades the ETFs CQQ and SQQ. I also have the Stocks Channel Discord where you get access to all of my intraday updates and analysis, and if you're interested in either service, you can find out more information or how to join by clicking on the links in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.